Here are 3 news stories from the world of the cryptocurrency industry. First news. Notcoin price drops by 40%. The price of the native token of the popular tap app, Notcoin, has dropped by 40% over the past 9 days. A 4-hour chart shows a bearish trend, hinting at a continued decline. Although not briefly broke above the 100 EMA on June 11, it failed to cross the Ichimoku cloud and retested its baseline, marked in red. Amid the Bitcoin correction, the token's price fell below it. Despite a brief upward movement, Notcoin could not maintain momentum and was rejected again by the baseline, which now acts as resistance, indicating a continued bearish trend. The Notcoin chart on 1-hour and 4-hour timeframes highlights several critical support and resistance levels marked by horizontal lines. These levels correspond to important flat structures of the 4H Ichimoku cloud's baseline and other significant price points. The price decline was triggered by breaking key levels at $0.0239, $0.0215, and $0.0198, and subsequent testing at $0.0159. Significant resistance levels on the 4-hour chart are noticeable at $0.0239, $0.0216, and $0.0198, which present serious barriers to price growth. Levels at $0.0162, $0.0159, and $0.0142, in turn, represent critical marks that could prevent further decline. If NOT manages to break above the Ichimoku cloud base and confirm it as support, the altcoin might partially recover. However, rejection will push it to the $0.0159 level, loss of which will lead to a crash to $0.014. Second news. Trump will not make Bitcoin great again. Recently, former President Donald Trump stated that all remaining Bitcoins should be mined in the U.S. The cryptocurrency community had mixed reactions to his words. Some Bitcoin enthusiasts supported Trump's idea that America should mine all remaining BTC. However, many experts argue that the U.S. presidential candidate's position does not consider the fundamental principles of the largest cryptocurrency by market capitalization. Journalist Laura Shin, who covers the cryptocurrency industry, raised a very important question: why are all Bitcoin enthusiasts excited about Trump's statement that all remaining BTC should be mined in the U.S.? Doesn't this create jurisdictional risk and make Bitcoin less decentralized and more vulnerable to attacks? Why are you applauding this? I do not understand, she added. Margot Pays, a well-known Bitcoin supporter in the crypto community, holds a similar opinion. According to her, the politicians' desire to concentrate Bitcoin mining in the U.S. will lead to centralization of the hash rate, which should not be allowed, noted Pays. Congressman Sean Casten also disagreed with Trump's statement. He explained his point of view on X. Casten emphasized the practical limitations of Bitcoin, focusing on the energy consumption of mining and its limited utility in modern banking. Bitcoin is ultimately just a piece of computer code created by energy-intensive servers. Saying that you want it to be made in the U.S. is kind of stupid. Cryptocurrency production does not create jobs or investments. It just consumes energy and computer time, he wrote. Some prominent figures in the cryptocurrency industry also commented. Galaxy Digital's head of research, Alex Thorne, sees Trump's words as a geopolitical signal that could prompt other countries to take Bitcoin mining more seriously. There is a view that competition will intensify, ultimately accelerating and strengthening global adoption. If your geopolitical rivals, or allies, for that matter, consider it important, you should also play this game or risk being left behind, he commented. Matthew Pines, a national security fellow at the Bitcoin Policy Institute, highlighted the potential geopolitical consequences of Trump's position. According to his forecasts, depending on the scale and implementation of Trump's cryptocurrency regulation, the global reaction could range from indifference to significant changes. I am not sure how that Bitcoin for America/America for Bitcoin policy will mesh with the potential political and geopolitically induced instability in the U.S. Treasury bond market, but it could become very interesting and very confusing, Pines noted. In his election campaign, Trump heavily focuses on voters from the cryptocurrency circles. This was largely facilitated by numerous polls among the American population, according to which many pay significant attention to the candidate's position on the cryptocurrency industry. Earlier, the politician began accepting donations in crypto. Additionally, Trump also promised to protect the right to self-custody for 50 million digital asset holders in the U.S. He also said he would pardon Silk Road darknet market creator Ross Ulbricht. However, Trump has not always viewed the cryptocurrency market with such enthusiasm. He previously called Bitcoin a scam, earning him the title of one of the most vocal critics of the new financial instrument. Therefore, some experts still believe the politician is just pretending to gather as many votes as possible. The former U.S. president's low credibility among world leaders further complicates the potential impact of his pro-cryptocurrency stance. It remains unclear whether his statements will lead to concrete policy changes or remain merely political rhetoric aimed at his electorate. Nevertheless, Polymarket data shows that the community estimates Trump's chances of winning at 56%. Meanwhile, the current president, Joe Biden, has a rating of only 35%. Third news. How inflation in the U.S. affects the market. Probably the most important news of the past week was the publication of inflation figures in the U.S. The results were better than expected. Inflation in May slowed to 3.3%. The forecast was 3.4%. The Consumer Price Index, excluding food and energy, was also better than expected, at 3.4% versus 3.5%. This situation gave investors hope for a reduction in the U.S. Federal Reserve's key rate. But it has not happened yet. The rate remains at the previous level, in the range of 5.25 to 5.5%. A reduction is expected by the end of the year with an 80% probability. Nevertheless, Fed Chairman Jerome Powell, as usual, gave an ambiguous statement about the economic situation. In his opinion, even a key rate increase is possible, although this is not considered in the baseline scenario. According to analysts from the K33 trading platform, a loosening of U.S. monetary policy could push Bitcoin to new price records. The analytical platform Glassnode presented statistics showing that large players account for about 27% of all Bitcoin in circulation. In absolute terms, they hold around 4.23 million BTC. The largest volume is held in spot BTC ETFs, 862,000 Bitcoins. It is obvious that big business considers the largest cryptocurrency not only a good hedge against inflation but also believes in its growth. Otherwise, they would not hold it. However, CryptoQuant analyst Axel Adler Jr. noted a 17% decrease in demand for Bitcoin from retail investors over the past 30 days. A similar picture was observed in January when the indicator dropped by 18%. Interestingly, after that, Bitcoin rose from $40,000 to $70,000. Most likely, Adler hints that history could repeat itself. The Fear and Greed Index compared to last week dropped by 3 points, to 74. This indicates prevailing greed among Bitcoin investors. The main news affecting the price of ETH, like BTC, was US inflation and credit rate forecasts. Nevertheless, Ethereum is generally doing well. Asset management company Bitwise noted improvements in payments through Ethereum. Analysts believe the platform has achieved remarkable success in cashless transfers, withdrawals, and transactions, compared to the traditional financial system. The average fee for a $5,000 transaction in Ethereum is 86 cents, Bitwise calculated. Meanwhile, the cost of an average cashless transfer in the traditional system for the same amount is $45, and withdrawals even more, $150. Bitwise representatives concluded with optimism. Ethereum has significantly reduced fees. This is a tenfold improvement, if not more, compared to traditional financial system participants. Historically, a technology that surpasses competitors tenfold in something is unstoppable. The technical picture is very similar to that of BTC. In general, the price of ETH is declining. However, the indicators give very different signals. The price is still above the 50-day moving average, which favors the bulls. But the RSI is declining and below 50, indicating that the bears are starting to take the initiative. Support and resistance levels are $3,355 and $3,900.